We don't want to get so excited about whatever it is, the project, the investment, because you have blind spots when you do that.
Hi everyone! So as you can see, we're in the higher level of the hotel today, and we both get upgraded to amazing view behind us. I decided, why not? Let's just take a little quick interview / podcast while we're in this beautiful Miami Beach area. And I know we've been trying to get in touch and try to schedule something. I'm so glad we're finally able to make this happen. So thank you so much for coming to chat with me today and come onto my show.
You're so welcome. Thanks for having us.
Thank you. So I have an interesting story to share. So before I actually met them, I got this curious text from somebody I never heard about. You want to talk about that idea? And it was because of you, right? You want to share how that happened? So one day, we just got this text from somebody named Jeff I didn't know about. Say, hey, do you guys want to come on the airplane with us? We're taking our airplane now to show people flying around the coast. But that was the idea. It was not coming from Jeff, right? It was coming from you. Why did you just decide to do that?
Well, we fly our November 614 Alpha. We fly it for fun, shenanigan, and also it's owned in our business. So we use it to fly into financial freedom. And then, of course, at Monterey, we thought, Pace said, make it an experience, make it you. And we love to fly. That's a passion that we both have. And so we thought we'd want to bring that passion to our family, our tribe, and the owners club.
Right.
So we thought we'd take you up in the pattern. And I watched your video and I was laughing about you and Heather Irving going, we're going in a jet.
But it was a super cool small jet. I'm not going to say Cessna because somebody's going to not mean it's not a Cessna.
It's not a Cessna.
What is it?
Experimental. Blaster Sportsman 2+2.
Right. So why is this experimental airplane? I'm going to drop the picture of the airplane they took me out on the air when we were in Monterey. It is so cool to see such a tiny little airplane parked next to the big giant jet just keep constantly taking on and off, and you were able to pilot it without trouble and just took me off in like a few seconds. It was a quite experience.
Yeah, we took you up. The weather is always an issue when you're in these coastal regions. And so we only had a window of between 10 a.m. and 4 p.m. before the coastal fog rolled in. You can see this here right now. And I'm a VFR pilot, so I can only fly when I can see. If I can't see, I can't fly.
Right.
VFR is visual flight rules versus IFR instrument flight rules. So
I see. Well, tell us about how you guys decide to use this tagline. I love the tagline so much. You said fly into financial freedom. And since then, you've been flying around, raising capital. You want to share that journey a little bit?
There's so many rules in order to learn how to fly. And you always hear about a plan that when you want to go from point A to point B, you have to have a plan. You have to have a checklist. You have to be safe. And so we thought, well, it'd probably be a good idea if we do that in terms of investing. Doing this for over 30 years, and we understand the risk and the rewards. And if you're new and you've never done it before, it can be quite scary, quite daunting. And we thought, well, if we can help share our experience with others and show them the way of investing the same way that the diligence that we take when we take somebody up, it's not we just get in a plane and hope.
Yeah, hope it's in a land.
There's no hope involved. It's a lot of work. Probably before you guys ever showed up, we probably spent an hour looking
All the components.
Making sure that plane was doing everything that we know it can do. We feel it. There are things you fly by the seat of your pants. That's how that came out.
We don't want that.
But you can actually feel what the plane is doing. You're actually strapping on the plane and you're becoming one with the plane.
Right.
And so when we invest, we want to become one with the investment. Does it make sense? Is this too risky? We're very much risk adverse.
Right.
Same when we fly, risk adverse. Laurie will tell you that when we fly, it's different than when I drive. I think you should probably tell that story.
yeah. So I can say that as a LA driver, which is why we call ourselves the Misfit Crew, right? I'm a cowgirl. He's a city boy, and he learned to drive in LA. So driving not his best skill, scares me by the seat of my pants, driver.
Right.
But as a pilot in command, I am not a pilot. I am the button pusher of life. I push his metaphoric buttons. Plus, I spin some knobs in the plane. But
Right.
I'm not a pilot.
But you help cruise the ship though, right? And no, he's not ship.
So what I do is non-essential to the plane. I'm not a pilot. Everything that I do, let's say if I dip the fuel stick and I measure, I do weight and balance. Jeff has to check that off.
Right.
It's not something that I can just assume.
Right.
I have to show him everything. He still has to check it, just like in our business. There's a lane that I stay in business.
Of eyes that are on everything. So when she checks the fuel, then I check the
We
fuel.
double check.
It's having two sets of eyes so that at the end of the day, you know that you did everything that you could do to make sure that it's going to be a safe flight, a safe investment. So you have two people looking at the same thing.
Well, this is great. This is a great segue into due diligence. Let's talk about that a little bit. There's a lot of investment opportunity out there. And what scared me the most is sometimes I'll ask people, why did you decide to park your money into this investment? The last thing I wanted to see is they're getting super excited and passionate about it.
Sure.
Because they get so excited, they just say, oh, that resort look beautiful, this part look awesome, this apartment look great, the pitch deck look awesome. I just decided to trust the operator and look into it, right? Tell us a little bit about that. What kind of due diligence you usually go through?
I just wanted to say one quick story. So we did a Zoom right before we left for Owners Club, and it was a new dater, and she had already purchased the land, and being that we were in a subdivision, she wanted to reach out to us and get our advice. Of course, we got on a Zoom with her. Unfortunately, this person had never bought a piece of land before, did not do the due diligence, doesn't know if she has dry land, needs a septic or a well prior to buying that lot, which can be deal breaker.
Yes.
And so we were giving our knowledge of before you buy these lands, make sure you're doing your due diligence. Unfortunately, she listened to the agent and said, but the agent said, ooh, that's rough. Did you go to the county? Did you talk to the city? Do you know if it'll perk for a tiny community? Yes. Can you get your underground? Can you get your electrical? Or is it dry land?
So a lot of time you have to do a perk test to make sure the water will drain. The purpose of doing the perk test is just to ensure that the land can sustain you operate a septic on it. Since it is a dry land, the water usually drain out too fast. It does not perk.
We have one rule. We don't want it. We don't need it. We don't care.
We do care, but we don't want to get shiny objects into it. Does that make sense?
You're being very specific about what you bought.
We don't want to get so excited about whatever it is, the project, the investment, because you have blind spots when you do that. You don't see what you would have seen if you weren't so invested in it.
And you're not as emotional. I think that's the key. A lot of time, investment is not an emotions. A lot of time, it's a number-driven investment to make sure.
It absolutely is. For us, it's always numbers driven. The more complex or complicated it is, the less we want to do it, because there's too many moving parts, just like in a plane, that can go wrong.
Right.
If one wheel goes wrong, that cog will not spin and your project will not get to where you want it to go.
I love that. So
And also, too, one other thing, that when you're talking about an investment and someone tells you, oh, it's a great deal, you got to do this, trust but verify.
yes.
Yeah, so we always are verifying
Yeah.
any data. That way you stay out of trouble.
Right.
And it doesn't mean that you're never going to get in trouble, because that's not the case. We told you how many investments we've done. We've seen it all. And there's always something new when you're investing, and you've got to be able to pivot on a dime when things go
Absolutely.
wrong, because they will, and you need to expect it.
And that is true in the plane and in real estate. My key phrase is this, and it keeps us alive in real estate and in the plane. And here's why. Your destination is your vision, your hope, your dream.
You're hoping to land the plane.
Hoping to land. So like EAA, Air Adventure, we fly it every year. We start out in July. It's 2,500 nautical miles from California to Oshkosh, Wisconsin. That is our hope, our dream, our vision. If we get locked into that,
Right.
that could be unsafe, land-wise, and that also translates into business. If you get shiny object syndrome, it can be unwise, unsafe, financially unsound for you.
Right.
So we like to say your destination is your vision, your dream, your hope, just like your real estate goals. You have to pivot in the plane, in life, to land the deal safely, wisely, and financially soundly and alive.
I love that.
And not only that, when you're going from point A to point B, it's not you're going from point A to point B. You're going from point A1 to A2 to A3 to A4. There's segments. Just like in real estate, there's segments. There's different parts of the flight plan that you need to encounter. And each one of those can kill you in the plane and can kill you in an investment deal. So you need to plan for what happens if this part doesn't work or this part doesn't work.
What's your plan B? What's your
Plan C?
alternative?
And so when we were flying to Oshkosh this year, we got grounded on our first stop due to weather.
Day one, we got grounded. So we had to completely pivot. We were supposed to be in 33 airports in 23 days. It wound up 47 days. And I can't even tell you how many airports. Yeah, I'd have to count.
But if you are so locked into you have to do it this way, you're going to die.
Right.
Because in a plane, you can't get it, I got to get there itis. And it's natural, it's human nature. It's the same with an investment. I've got to have it. This is going to make me so much money. Maybe, or maybe not.
Yeah.
I could lose so much money.
Exactly. And I have 2 sentences to summarize that. Plan for the best. Hope for the best, but plan for the worst. Yeah, is you never know. So I want to kind of dive deep a little bit. I love how you guys use airplane, different individual segue to your ultimate destination. I wanted to kind of dive deep a little bit when people present a deal to you, right? You mentioned about the checklist. Not diving into too deep. What are the first layer of checklist when you first look at the deal to see if it's even worth your time to move into the next step?
I guess for us, it's the type of investment. What are you talking about?
Right.
Are you talking about cryptocurrency? That's a no off the state. If it doesn't have real in the first name, real estate, we're not doing it.
Right. So any type of real estate or residential or commercial?
Right now, we're not doing commercial. We don't really have the experience in commercial. There are so many other people
Moving
like Doran Levy. I mean, he's fantastic. He's the one to go to about commercial real estate. He knows the ins and the outs. Yeah, so we try to stick to our lane of what we've dealt with and what we
sneak it in. Stick to our lane. That's what we take.
what we know, what we don't know. And it's always good to know what your limitations are. Commercial is a limitation for us. But if you're talking about residential real estate, there's so many segments inside residential real estate. Are you doing a ground up build? Well, we've done that. We know what to do there.
Right.
Are you talking about doing a subdivision? Well, we're in the middle of one and we know what to do there. We're talking about buying and holding. We've done that. We know what to do there.
So it has to be the right asset class just right off the bat. If it's not the right asset class, it's automatically no.
Correct. And it's not because we don't like you and don't want to invest in you. It's because our knowledge set isn't there and we don't want to risk not only our biscuit, but your biscuit. When we do real estate investing, we're your partners. We're there for advice. Hey, oh yeah, we've seen that before. If you try this instead of that, that will solve this problem. So if we don't have the experience, then we can't be a good partner for you.
Correct. Yeah. You need an extra set of eyes and also advice along the way. You want to talk about a few recent investments that you learned from it versus the worst investment? Feel so happy that you step away from?
I actually do want to talk to you because I seen your podcast that you did on co-living.
Correct.
With Pace.
Yes.
And I loved that Pace talked about the good. You talked about what you found you weren't. So I'd love to bounce off of that. So before we got into Gator and right before we went to Oshkosh last year to fly 2,500 nautical miles, my son, who's on the spectrum, came to me and said, I don't want you to control me anymore. I'm leaving. I'm going to be homeless. I went to Jeff, who's going to be a soon-to-be stepdad, and said, we have a problem. And so fast forward, we got him a house, talks him into co-living, which he helped remodel it. So it gave him a lot of pride.
Oh, and purpose.
But it also gave him a skill set he didn't know he had. He had to live with those people. So the first group of people we brought in was some kids out of the foster. They aged out of the foster system. So he was in a house full of 18-year-olds out of the foster system. He helped place them, interview them. For somebody on the spectrum, that was very hard for him.
Right.
The next group, as they aged out and we helped them get their own place, and we did help them relocate into a bigger place. And so then we had our next round of co-living come in, and it wound up being some grandmas. And so we had some senior living in
Senior
with
living, I love it.
then he had crock pots in there. Fast forward 10 months, he moves back in and says, when we get back from this year, Oshkosh, I'm back. I don't like co-living and I want to move back in. So now we have our new problem. You're working on that.
I see.
But through that, we found our pain points of co-living.
Right.
And we found that for us, as much as we fly and we own 5-star property management, so we also manage properties for investors for ourselves across the United States. And we found the bad side of co-living and how much work it took
It is a lot of work.
to get our rooms going in and out.
Right. It's such a great purpose. I'm so glad you raised your purpose. So I came in with a full heart, wanted to do this, and I still wanted to do this because investing with a purpose is very important to me. So I ended up segue into still running co-living, but it's no longer me running co-living. Guess what? I'm not very good at running co-living. So I pivot. You know, I'm sure there's a situation that you're like, I plan on flying over there, but the weather is just treacherous. And I realized on the way over there, I was like, I still want to help people, but me, myself, may not be the best steward for that. So you know what I ended up doing? So I ended up on master lease, just like Jamil said, master lease to a nonprofit locally. Then they will place a disabled veteran into my home. So still doing the same thing. It's just not me running it.
Exactly.
So you pivot.
Right. And so with this house, we are pivoting. It didn't work out for my son, but that's okay, right? And so on to the next journey for him.
Right.
But it taught us a lot.
And I also think it also taught him a lot, I'm sure. Like, you know, like you said, he found purpose. He's building something.
You know, when you're doing a rehab, you think, oh, well, you're just going to let the contractor deal with the contractor now. Actually, I find that if you know every aspect of fix and flip, the fixed part of it, you need to know what your contractor should be doing and shouldn't be doing. So one of the things Bradley learned was
That's my son.
how to put in a door. So we went and we took old doors, we took it to the shop and had them create new doors, and then we had to hang them. So we learned about putting in hinges, he learned about putting in doorknobs and how it works. And now he's got that skill set.
Right.
And Laurie's son Joseph is also learning that skill set, so that if we're out in the air and say, hey, can you make sure that this gets done? They've done it.
Yeah.
They know how to do it, or they can watch the contractor to make sure they're doing it the way we would just.
So I have 4 boys, and we owned 2 construction companies together and operated them. So Bradley, who was co-living, and then Joseph, they had been working in our construction companies for years. So they have been helping us learn that skill set, rehab, and now they're crossing over into being with the marketing and also how to rehab, remodel, and also do the management side of it. They will be taking over, the business. So generational wealth is huge. So we are teaching them all aspects of our journey.
Wow. Okay.
Yeah, I have 2 girls and they have watched me do this for many, many years. Through exposure, I have my youngest daughter just parroting back and forth all the stuff that I would say she'd be watching these fix and flip shows. She'd say, oh, no, that's not the way it's done.
Very unrealistic.
So, absorption through seeing, right? And so,
Yeah, so just, like watching HGTV is totally different than the actually flipping houses. So I love how you involve your children. I love you try to involve them. They can work in the business. They can build legacy. I think that's a really great way to give them a little taste to see if they want it and see them flourish into the future. Hopefully in the future take over.
You want to talk about investment deals? Let me tell you about an investment deal with our kid. You're going to love this one. So I have 4 boys. Thomas is my 26-year-old, and he is girlfriend, hopefully soon to be fiance, but not yet.
Yes.
Caitlin. And about a year ago, they came to Jeff and they said, we've got to have this duplex. And we found it, and Jeff buy it. And I said, don't do it. And Jeff did what?
I did my research. It was a duplex in California. You know how expensive real estate is in
Yeah, in
California.
California. But before you dive into, I want to ask, why do you say don't buy it?
Because my son said, buy it and then I will get the loan and buy it from you, Jeff.
Oh, I
And
see. Okay.
I knew my son better than he did. And I said, he's not going to stay at his job. He's going to have an issue. And he was still bouncing around and didn't know his
Right.
avenue yet.
I see.
So fast forward 6 months and he couldn't get the loan because he had switched 11 jobs. 2 of those jobs was working in the hospitals for me.
Right.
And he had just gotten his broker's license and had went and switched from veterinary medicine to his brokerage license. So he couldn't get the loan.
Okay, so this is a great example of like not to invest emotionally. I'm sure you have that.
Right.
I wanted to help the kid.
Right.
But it's not really a sound investment.
But it was a sound investment. Jeff vetted the deal. And that's the thing, is it was a great investment. And he said all day long, it'll work. If he doesn't acquire it, no worries. It's still a perfect asset. So we got it. So fast forward, he couldn't get the loan. But what did he do? For 30 days, they didn't take more calls. And I went, Jeff, something's off. And so I finally met him. He said, meet me at the bakery. And so I meet at the bakery. And then he goes, I'm looking for him. He's not at the bakery. He's standing in front of this shop. They bought a shop, a nursery that they started 30 days prior and didn't tell us, which is why they couldn't get the loan.
Right.
They put all their money for their down. They actually saved their own money.
Right.
They didn't ask for help from us. And they put the money they were going to put into their duplex into opening their own business. Now they blindsided us and it's doing well and we're proud of them.
So what happened to the duplex now?
We still have it.
Yeah.
Hold on.
Uh-oh.
First off, when you're investing with family or doing something for family, you got to plan that it's going to go sideways because
Expect the unexpected.
expect the unexpected.
Yes.
It's going to go sideways. So as far as the deal goes, the deal is separate from the family issue. So I looked at the numbers. The numbers made sense all day long. Typically in California, you're going to spend probably $1 million for a duplex. This particular duplex was on the market for $350,000. We had competition when we bought it. We bought it for $355,000. When we bought it, we made sure that the numbers worked out. It was a 1-bedroom, 1-bath each side. It had a garage. There wasn't really much work that needed to be done to that duplex.
Okay, it's still a sound investment.
It had one unit rented, the other unit wasn't rented, and the one that was rented so low that that tenant needed to be moved because you needed the numbers to match. So we got that from like $900 a month with one tenant and not rented on the other side to both sides being rented at $1,700 a month. So we moved up the rental value to make these things work. And so now financially it works all day long.
Nice. Okay.
And plus the value has gone up $100,000 in that year. So tell me that I didn't do my numbers.
Well, the numbers still add up all day long. So it was always a sound investment. Yeah.
We were not going to do it if it did not make sense.
Right. Perfect. Okay. Well, then I think this is great to kind of wrap out a little bit. If people wanted to work with you guys, right? What type of investment you guys are looking for now, and what are the investments you don't want?
So our buy box is multifamilies across the United States. We're leaving here and we're going to Oklahoma. We've been in another investment group and we found these builders through that group and they're building multifamilies out in Oklahoma. So now that they have some built, we've been talking to them for a couple years now and they're finally starting to, get the builds done. So already we're going to go look at them. Multifamilies and then also veterans, part of that, the co-living. I also want to merge towards that.
And additionally, some of the things that we've done that we will still do if it's right, we can do fix and flip. We would invest in that if it made sense. Done ground up builds, we can do that. We've done developments where we've taken raw land and split it up and put infrastructure on it and build houses. So what Laurie was talking about was these properties in Oklahoma. They're fourplexes. That seems to be our sweet spot in terms of multifamily because you can do commercial lending, you can do residential lending on that. And these particular set of builders can build at $100 a square foot. And if you know, that's cheap. And not only that, the rents are high. So when you can do that, there's two aspects to when you're buying an investment that you're going to put renters in. You got the renters portion and you got the property portion. You don't want to have the property portion be a burden because the renters are going to be calling, oh, the toilet backed up. Oh, this is broken. And then you spend most of your time fixing the property.
So if it's a brand new build,
You don't have that.
you don't have that issue, at least for the first 10 years. Gradually reduce your tenant call. Okay, so it sounds like Oklahoma City multifamily ground-up build. It's your focus now.
And not only that, but we're also lending money to investors and trying to help them move their projects along. But it's got to make sense.
Right.
So not only 5-star, but we have BSF Global, which is our private money lending, private money partnerships. So our CFEs, I've ran hospitals. I just spoke to some owners that are getting those stoned in and got to share some of my knowledge from the years of running an RCFE. So that is another thing I would look at to not only help with my knowledge, but invest in.
There's just lots of opportunities. Bring it to us. We can help. We can partner with you guys. We can help lend money to you guys. We're in it to win it. We're very collaborative. We want to help people help make their dreams, which will also help make our dreams. And so,
So that's perfect. So we will include the link in the description how to reach out to you guys. Is Instagram or Facebook is the best way?
Instagram, TikTok, Facebook. You can't miss us. You can blink our plane if you fly by us. You can pretty much blink us anywhere.
That was so much fun. You guys made my day that day. I still remember the text. Wait, what? Airplane? Like, is the airplane fly in the air?
Yeah, did you have fun with pilot?
It was so much fun. And we were on the air that day. It was just such a beautiful coastal line in Monterey. So that was quite an experience. You guys knew it.
Anytime. We'd love to fly you again as soon as we can get our plane over safely to the next Owner Club event.
And not only that, Owners Club members, if you guys want to experience flight, we'll take you up and get you to see what that's like, to see the world from above versus below.
Yes, it's about the total vantage point and opening your mind. So yeah, thank you so much for coming to my show.
I'm so glad we finally got to do this.
Thank you, Chad. Thank you, Laurie.
Thank you. Bye, guys.
Bye.